The clock is now running on crypto's biggest regulatory bill in years. Bitcoin and Ether ETFs just snapped an 8-week losing streak, and a brokerage-built blockchain is closing in on one of Ethereum's biggest Layer 2 networks in under 2 weeks. I'm your host, and this is BC Updates. We start in Washington, where the crypto industry's top legislative priority is running out of runway. The Digital Asset Market Clarity Act missed its July 4th target and now has roughly 20 working days before the Senate leaves for its August recess. According to a CCN report picked up by Yahoo Finance, the bill cleared the Senate Banking Committee back in May by a vote of 15-9, and it's been sitting on the Senate's legislative calendar since June 1st. But here's the holdup. Senate Majority Leader John Thune hasn't allocated floor time, and no cloture motion has been filed. The sticking point is an ethics provision addressing government officials' ties to the crypto industry, a key demand from Senate Democrats before they'll commit their votes. Industry analysts note this is the most advanced any crypto market structure bill has ever gotten in Congress. But with midterm campaign season approaching in the fall, insiders say if it doesn't pass before August recess, its odds for 2026 drop sharply. We'll be watching the calendar closely over the next few weeks. Now to ETF flows, where we have some good news for institutional sentiment. US spot Bitcoin and Ether ETFs posted combined net inflows of $281.8 million for the week of July 6th through 10th, ending the longest outflow streak in ETF history. According to data compiled by SoSo Value, Bitcoin funds drew about $197 million, led by BlackRock's IBIT. Ether funds added roughly $84 million. That snapped 8 consecutive weeks of redemptions that had totaled more than $8.2 billion since May. Proportionally, Ether's rebound actually looked stronger. Inflows represented about 0.88% of total ETH ETF assets, compared to roughly 0.26% for Bitcoin. Analysts caution that one positive week doesn't confirm a trend reversal, but it is the clearest signal yet that redemption pressure may be easing. Moving to Layer 2 developments, Robinhood's new blockchain is making waves. Robinhood Chain, built on the Arbitrum Orbit stack, launched its public mainnet on July 1st. By July 10th, it was processing 7.6 million daily transactions, closing in fast on Coinbase's base, which recorded 9.2 million over the same period. A big driver here is a 90-day gas subsidy. Robinhood is covering every user's transaction fees through the end of September. That's fueling rapid adoption, though a meaningful share of the activity is tied to meme coin speculation rather than the chain's stated purpose: tokenized real-world assets. On the DeFi side, total value locked on the network has reached nearly $140 million, with lending platforms Morpho and Athena providing much of that liquidity. Weekly DEX volume hit $3.1 billion, though tokenized stock activity, the network's core use case, remains comparatively small at just under $13 million in market cap. The real test comes in October, when the gas subsidy expires and the chain has to compete without the fee advantage. In institutional infrastructure news, ADI Foundation announced a $50 million strategic investment to expand ADI Chain, a sovereign-grade Layer 2 network built for governments and enterprises. According to the announcement, the Abu Dhabi-based project already has real-world deployments live, including sovereign stablecoin infrastructure and government digital transformation initiatives. The funding will go toward network infrastructure, ecosystem expansion, and institutional integrations. It's another example of the broader trend we've been tracking: governments and large institutions increasingly treating blockchain as core financial infrastructure rather than a speculative asset class. Turning to security, developers using Injective Labs' software development kit should take note. Attackers compromised the project's GitHub repository and published a malicious NPM package on July 8th, designed to exfiltrate cryptocurrency wallet data through fake telemetry functionality. The compromised package version has since been deprecated from the NPM registry. This incident is part of a broader pattern of supply chain attacks targeting crypto developer tooling. A reminder that security risks increasingly extend beyond smart contracts themselves and into the software supply chain that supports them. Bitcoin dipped below $63,000 over the weekend following renewed US-Iran hostilities, part of a broader risk-off move across global markets. South Korea's KOSPI index fell over 9%, and oil prices jumped about 5%. According to CoinDesk market data, liquidations tied to the move were comparatively modest, roughly 1/6 of the worst levels recorded over the past 30 days. Notably, the ETF inflow data we covered earlier suggests underlying institutional demand held up, even as short-term price action reacted to geopolitical headlines. Now for this week's on-chain and growth insights. Robinhood Chain's rapid rise highlights a broader theme. Consumer-facing platforms are increasingly launching their own settlement layers rather than building purely on existing chains. With 28 million existing Robinhood brokerage accounts sitting one bridge away from the new network, the distribution advantage is unlike anything a typical L2 launch has had before. On the institutional side, Ethereum Institutional, the nonprofit launched July 1st by former Ethereum Foundation staff and backed by Bitmine, SharpLink, and Joseph Lubin, continues positioning itself as a neutral bridge between banks and the Ethereum ecosystem. It's part of a broader restructuring where the Ethereum Foundation is narrowing its focus to core protocol stewardship, leaving ecosystem functions like institutional outreach to independent groups. And on the security front, the Illbloom wallet vulnerability we're tracking has now been linked to more than $5 million in confirmed losses, with researchers warning the exposed wallet set continues to grow as they uncover more affected seed generation paths. A few quick hits before we wrap up. AaveDAO is voting on a standardized technical asset listing framework across its V3, V4, and Horizon markets. That vote closes today. South Korean chipmaker SK Hynix saw its US ADRs jump 13% on their debut, part of a broader rotation of capital toward AI infrastructure that's been pulling some liquidity away from crypto risk assets. Strategy, formerly MicroStrategy, raised $466.7 million via a stock sale last week, growing its USD reserve to $3 billion, while its Bitcoin holdings remained unchanged at 843,775 coins. And Japan's Prime Minister Sanae Takaichi reaffirmed government support for Web3 startups at WebEx 2026, pledging increased funding through government-backed institutions. That's this week's Roundup. The next few weeks are pivotal. Watch for CPI and PPI data this week, which will shape Fed expectations, and keep an eye on the Senate calendar as the Clarity Act's window narrows. Which story are you watching most closely? The regulatory clock in Washington, or the Layer 2 race between Robinhood Chain and Base? Let us know in the comments and subscribe for next week's update. See you then. This video is for educational and informational purposes only. It is not financial advice. Cryptocurrency markets are highly volatile. Always do your own research and consult with a qualified financial advisor before making any investment decisions.